Last week, the main pairs traded within tight bounds yet again, with the dollar taking the top spot against its peers. The European Central Bank kept interest rates unchanged as expected. However, the key takeaway was that rate cuts are likely to begin in April, with President Lagarde suggesting it is far too soon to discuss policy changes this early in the year. The market is pricing in 140 bps worth of cuts before the end of 2024. In the US, the latest PCE inflation figure showed a slowdown to 2.9% versus the 3% forecast figure. US GDP printed at 3.3% versus the 2% forecast, showing the resilience of the US economy despite a multitude of global concerns. In terms of noteworthy market moves, pound sterling to euro is pressing well over the 1.17 mark, taking the pair to a fresh 5-month high. Pound sterling to US dollar has been dancing on either side of 1.27 for the past 7 days, as it awaits further key updates and data releases this week. Euro to US dollar took a 1% tumble back to around 1.08, following the passive ECB commentary and recent dollar strength. Ahead this week, the US Federal Reserve and Bank of England will give their latest policy updates. Both central banks are expected to leave rates unchanged. As always, the press conferences will be the main focal point, with the market keen for guidance from both central banks. Markets will also review the latest HICP inflation for the Eurozone, as well as any relevant news flow from across the globe. Finally, as we head into February this week, we will also see the latest US labor market report on Friday.